Waste Management stock, ticker symbol WM. They just released earnings and the stock went down roughly 1% as of recording this video. People love WM because of the dividends, and with reason. But does this also mean that Waste Management stock is a buy at current prices? Well, in this video I'm going to show you real quickly what WM does, the most recent earnings report, the fundamental analysis, dividends, returns versus the S&P 500, and in the last part I'm giving you my price target to see if they are a buy or not. And I think you definitely want to see that part, so make sure to watch until the end. And I'm also very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So, what does Waste Management do? Waste Management is the leading provider of comprehensive waste management, offering services like garbage collection and disposal, recycling and dumpster rental. According to the earnings, WM missed on both EPS and revenue, so that's also one of the reasons why the stock went down. One of the things that I think is very important is the total volume. It decreased 0.7% compared to an increase of 2.8% same period last year, so that doesn't look good, of course. A thing that I liked is the operating EBITDA. It's sitting at 27.5% of the revenue. Last year it was at 26.7%, so it has increased a bit year over year. But keep in mind that for the full year it was sitting at 28%, so that's something to keep your eye on. In here we see that the 3 months ended for WM. Revenue is up 5% year over year. Net income is down the slightest bit and diluted EPS is up the slightest bit as well. That's of course because of the share buybacks. A thing that worries me a bit is the fact that free cash flow is down year over year, from 243 million down to 196 million, which is quite a lot, driven by capital expenditures. WM expects revenue to grow between 4 and 5.5% in 2023, driven by pricing programs. Collection and disposal volume is expected to be flat. EBITDA is expected to be in a range of 5.8 to 5.9 billion for the full year, compared to 5.5 billion in 2022, which is an increase of around 390 million at the midpoint of the range. WM intends to invest approximately 980 million for capital expenditures on high return growth projects in its recycling and renewable energy business. I really like this since in the previous screenshot they mentioned that both segments are expecting a decrease in volume. One of the most important things for dividend investors in this earnings report was the dividend increase of 20 cents, increasing the annual payout from $2.6 to $2.8. This will be the 20th consecutive year of increasing the dividends. Next to that, they plan to buy back shares worth of 1.5 billion. This is also something that I really like. And now that we know more about the company, it's time to check the fundamentals of this stock. But first, if you've made it this far into the video, I want to thank you a lot for watching this video. Make sure to join my Discord channel for free, to meet other people within the community and to talk about stocks, of course. It's completely free, so don't miss it out. Let's continue with diving into the fundamentals. WM is a 63 billion market cap company, which makes them the largest waste collection company in the world. PE ratio is at 28, which could indicate that you pay a premium for this stock. Later in this video I will show you my 3 price targets for waste management, so make sure to watch until the end, because PE ratio is only telling a small part of the full story here. Revenue is at 19 billion and in this graph we see that revenue went up in the long run. During the lockdown periods, revenue increased at a higher pace, as we saw in the most recent earnings. It's expected that revenue will grow at roughly 4 to 6% in the coming year. Margins are going up and down over a longer period of time. In the past couple of years it was quite steady, and most recently it increased a tiny bit. EPS is also going up in the long run, but it's not always steady and consistent. Most recently the EPS went up, also because of the lockdown revenue increase. Price to sales ratio is at 3.3 right now. It has increased quite a bit most recently and it's pretty high in general for a slow growing company. This is something that I don't like, of course. And it's the same story with the price to book ratio. This number is too high and the fact that it's increasing is also something that I don't like. Price to free cash flow is around 33 right now, and this indicates that you pay a premium for this stock. The question is WM worth the premium price? Analysts expect EPS to increase in mid-single to high single digits in the coming years, which is very nice of course. Revenue is expected to increase at mid-single digits in the coming years, and after that they expect revenue to stay flat, which is of course a bit concerning. Return on assets is sitting at almost 7%, which is just below my 10% minimum. So this is something that I don't like of course. Return on equity is looking good. And the most important number, return on invested capital, is sitting at 10%, which is really nice, especially since it's above the 5-year average of 9.7%. To me, this number is so important for waste management. They really know how to invest their money at high returns. Current ratio is at 0.85, which is very nice since it's below the 1.5 mark that I prefer. So this looks also quite good. Total debt is sitting at 14 billion, and I prefer companies that can pay down at least a third of the total debt with the total cash position. Right now total cash is sitting at 137 million, so they can't pay down a big chunk of their total debt, which is something that I don't like of course. So it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And in this graph we see that free cash flow is going up kinda steady, so this is something that I like. Shares outstanding is going down in the long term, which I prefer normally. But you can argue about it for waste management, since you pay a premium for the stock. So if the company buys back its own shares at a premium price, that could mean that it's maybe not the smartest move. But to me it's very important that shares outstanding are decreasing, since it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyway, dividend yield is sitting at 1.68%, which is not that high to be honest, but it has to be said that today's increase isn't included in the dividend yield. So when the dividends are approved, the dividend yield will be a little bit higher. Annual payout is at $2.6 and payout ratio is at 45%. I prefer 50% or lower, so right now they have roughly 55% left in cash to buy back shares, pay down debt, do acquisitions and all other things. The 5-year growth rate is at almost 9%, which is pretty good. And they grew the dividends for 19 years in a row. Very impressive. Overall a decent looking dividend scorecard, but how about the historical returns? I decided to compare waste management stock with the overall market, in this case the S&P 500. Next to that I added RSG, which is their biggest competitor. We're looking at returns including dividends. On the 5-year chart we see that both WM and RSG beat in the S&P 500 by a big margin, which is very nice. On the 1-year chart we see that WM is the only stock returning a positive number. The S&P 500 returned -8%. On the 6-month chart we see that all of them had a negative return, but the S&P 500 is nearly returning positive numbers, so that's the difference there. On the 1-month chart we see that S&P 500 had a positive return, while both WM and RSG had a negative return. So bottom line, WM did beat the S&P 500 in the long run, but most recently you were better off owning the S&P 500. So what does this mean for WM? Is it a buy at current prices? Well, let's check the 3 price targets that I created using the Everythingmoney software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 3, 5 and 7%, since I think they will increase the revenue at the same level as they did historically, and also based on the analysis expectations and earnings report. Profit margin I'm filling in 10%, 11.5% and 13%. For the free cash flow margin I'm filling in 10, 11 and 12%. For the PE ratio and the price of free cash flow I'm filling in 15, 16 and 17, since this is a slow growing company. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. Right now WM is at $153. I hit analyze and we only see red numbers. We have a low price target of $58, which is quite a big drop. We have a mid price target of roughly $80 and we have a high price target of $100 to $110. To me the mid to high price target is the most justified here, so that means 80 on the low side all the way up to $110. This means that waste management is massively overvalued right now based on these assumptions. My final conclusion is that I really like the business. They are in a niche industry and they are doing it great. Most fundamentals look pretty good to me, but the valuation isn't that good right now. The stock has traded sideways for a really long time and I think the stock price should come down quite a bit before becoming a value play. I did own WM in the past. I bought at $100 and sold at $160. It was a great stock, but at current prices I think it's not worth it. Dividends are pretty okay but not spectacular. Bottom line, the stock needs to drop, so I'm waiting. But even with disappointing earnings and outlook, the stock doesn't go down big time. So let's see when the stock hits one of the price targets. It might take a while. And remember to always do your own research and never fully trust on what I or other YouTubers say about the stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I'd really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.